Bionano Genomics, or BNGO stock, announced some breaking news today that the company received a 180-day extension from the Nasdaq to regain compliance. And this is big because this stock was trading under $1 per share for quite a while. They got a notice from the Nasdaq saying they're gonna get delisted unless their share price can go back up, and that would not be good for the stock because then that would make it an OTC sketchy stock. Typically, when you're delisted from a bigger exchange like the Nasdaq and you put on the OTC, you lose a lot of credibility. A lot of investors will not touch your stock, or they'll sell out of their positions to realize any gains or losses. It's just not a good time for any company in any stock. Bionano now has until June 28, 2021 to regain compliance with its minimum $1 closing bid price per share requirement, and if they don't meet this by then, well, goodbye, they're going to get kicked off the Nasdaq. Well, there is good news though, because as of today, not only is the stock up 100%, but it's also well clear of that $1 threshold that they need to hold by the end of June to stay on the Nasdaq. This means that any fears around the delisting talk here is pretty much suppressed at this point. Now, the other piece of news, kind of random here, is that when I was looking through their management team, I noticed that their CFO also used to be at Tesla. I know it's not really related to this delisting stuff at all, but I know many of my viewers are Tesla shareholders, so I thought you guys may like to know this little tidbit information about this company. But now, getting into the actual video here, there's a couple of things that concern me, a couple of things that look really good for the future of this business. So I want to talk about all of that in this video with you guys. Firstly, let's talk about a red flag that I noticed. Let's get the bad news out the way. Secondly, let's talk about some financials. They'll look at their cash, we'll look at their debt, and I'll give you my thoughts on this. And finally, I'll share, is it too late to actually buy into this stock today? So guys, if you appreciate the timely upload, all I ask is you smash that like button down below. You guys have been incredible with that here in 2020, and let's end off the year strong. Let's get at least 1,000 likes on this video. Starting off here with number one, a red flag that I noticed, and I really want to get this out of the way here. So when I read their recent announcement here about, the extension that they received, there was something in there that didn't really sit too well with me. The company pretty much openly stated that they intend to do a reverse stock split if they didn't meet these requirements by June, and they didn't try to sugarcoat this in any way, saying that the split would be done solely to meet these requirements. Now, you may be thinking this is a non-issue, reverse stock split, the market cap doesn't change, valuation doesn't change, it shouldn't matter. Theoretically, yes, that's true, but I've followed a stock in the last few years that's done a reverse split, and let me just show you. So this company here had a ton of hype, was at the forefront of the green movement, and was pushed up like crazy because of their future and potential. But then after doing reverse stock splits, look how beaten down the share price is. The stock never traded at near $150 per share, but because of these reverse splits, it appears that way, and it also puts the current share price down to around $8 per share, which means that the stock is down over 96%, which is absolutely insane to think about. And you're probably thinking, okay, down 96%, sure, pretty bad performance, yeah, duh. But they could just easily double their share price and regain all of these losses, right? Guys, no, this is a key mistake I see happen a lot, and a mindset that needs to change. To get these gains back, it requires a lot more than just a double up. To regain this 96% loss, the stock would actually need to be up 2,400%. Now just think about how many stocks in your portfolio are up, say, over even 1,000%, let alone 2,000%. This will really give you an idea of how detrimental, reverse stock splits can be to a stock. But of course, this is not what I'm saying is going to happen here with Bionano. It could be a completely different story altogether, but when I hear reverse stock split, my mind goes there, and it's not a good time. So now you're probably wondering, okay, well, this random stock that I threw in this video is down 96%. Great. How does this relate to Bionano? They're two different industries. What's the comparison here? So here's Bionano's chart, and we can see this name is down 97% from its highs, And this all happened really quick in the last year and a bit. There's been extreme selling and many investors lost a ton of money in the stock. But now after this massive crash, maybe it's time for it to get back to its previous highs, right? Well, I mean, it's possible, but this is even crazier than the previous stock because BNGO stock needs to go up over 4,700%, and this is a big mountain to climb. Guys, if somehow the stock can get back to its previous highs, a lot of people will make a lot of money. 4,700% returns. I've never seen that in my portfolio. I'm sure many of you watching have never seen that in your portfolios. It's extremely rare and difficult to get those sort of gains in the market, but maybe the stock has that potential. But the question I ask myself is, okay, great, the stock was up there at one point, could go back up there at some other point. That's typically how investors think when you're looking at charts, right? But I want to dig deeper and I want to look at their fundamentals to see, is this really a possibility? What's going on? Is this a strong business like underlying with their cash, their debt, their assets? Let's talk about all that. Remember, you're actually buying into a business here, Bionano Genomics, not just a ticker symbol BNGO. The ticker symbols move up and down all the time, but a business, the underlying company, if it's a good business, will get better and bigger over time. And as a result, the share price will typically follow. So anyways, getting to our second part here, financials. What's the cash and debt situation like? So I briefly spent a few minutes looking at their income statement, and right away a couple of red flags popped up to me. Firstly, revenues for 2020 has nosedived. They pulled in $6.8 million during the first 9 months in 2019, but for the first 9 months in 2020, this is nearly half at $3.5 million. This has resulted in a lot more pressure on them, and clearly, as we saw, investors were not satisfied and sold off the stock, resulting in over 90% losses. Now, this also contributed to net losses of $29.3 million versus $21.9 million last year, but a lot of it was drawn from that selling general and administrative line item. So this could be a one-off expense for 2020 that they're able to reduce significantly in 2021. Now, in terms of their balance sheet, their cash balance is good at nearly $19 million, and the current assets, which is short-term assets, sits at around $29.2 million. And this adds to the total assets of around $41.3 billion. This compares to $26.7 million total liabilities, which includes $1.775 million in long-term debt they don't really have to worry about right now, but it also includes $14.2 million in long-term debt that they have to pay off very soon. But the good news is both of these things can be paid down with the cash that they have sitting on their balance sheet today. But unfortunately, once this is done, it'll put the company in a much worse position to be spending on things like R&D. Now, after they pay off these big obligations, I wouldn't be surprised to see some dilution here, especially if the stock price goes up quite significantly, because these companies are just waiting for the opportunity to raise more cash so they can throw it back in the business, continue with R&D, continue with expansion, continue with growth, because at the end of the day, that's what investors are looking for. But that being said, the balance sheet, guys, I actually think was pretty good. Like, I was expecting this to be pretty bad because it's a penny stock, 97% sell-off. Things don't look good from, at surface level. So I was expecting a pretty bad balance sheet, but surprisingly, not too bad. They're able to cover the liabilities. I don't think that there's any concerns here, at least in the foreseeable future, of this company facing any hardships. So now let's discuss, is it too late to buy into BNGO stock? So now when the hype train gets going, it attracts a ton of new investors, a ton of speculators, everyone's bullish, and everyone wants to ride the wave up. Now, while there's a lot of money to be made, and a lot of you have probably already made good amounts of money on this, there is a lot of risk involved, and you have to realize that. When I look at this chart, what first comes to mind to me is pump and dump, which is common for penny stocks and is something you see all the time when it comes to stocks trading at like $1 or less than $1 per share. Typically what you see is a catalyst comes out, news outlets cover the stock gets pumped higher and higher, and then boom, overnight things change, millions of dollars are lost, and many of you are left bag holding. Now, am I saying it's going to happen with Bionano? No, I'm not. But I am saying that you should be prepared in case this happens. This company has a decent balance sheet. This company has potential here to actually turn things around. And when I look at what analysts are expecting next year for this business, it's pretty big. They're expecting 141% growth year over year, pulling in revenues of nearly $18 million. So it's a big night and day difference from 2020. And this could mean that the run-up that we're seeing in the stock today is justified, is sustainable, and it was just punished way too much for what the business fundamentals actually show. So while I'm personally not buying the stock, I will say that for those of you that are, just have a realistic mindset for your risk tolerance. Just as quickly as we doubled up on the stock here in a day, we could lose those gains in a day as well if investors decide to take their profits and some fear gets into the stock. Now, I will say that the risk reward does look pretty attractive, especially if the stock can recover to even half of where it was before. So there is a lot of money to be made here, and I can't really blame you guys for taking a risk on this one as a speculative play. Keep that in mind, not financial advice, but just keep that in mind. But whatever you do, just be mentally prepared to say lose a good chunk of your cash if things go south. That's all I'm gonna say, and I wish you guys all the best on this. So again, if you enjoy this timely upload, guys, smash the like button down below. Let's get 1,000 likes on this video, and follow me on Instagram if you haven't done so already. Link in the description down below. Just a reminder, today is the 30th, so it's the second last day before prices do go up in our VIP group. So if you're interested in joining, link in the description down below as well. Anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.